Welcome to the West Midlands and Warwickshire Green Business Podcast. Subscribe now for more episodes. Hello and welcome to the latest edition of the Green Business Podcast. I'm Jonathan Howl, Energy Advisor for the Decarbonisation Net Zero Programme, and I'll be your host for today. Now, our last two episodes featured some very different topics. We've brought you what I would call a really interesting case study on a traditional manufacturing company driving down their energy use. And then we also discussed in a further session the benefits of becoming a B Corp. So if those sessions sound of interest, please go back and have a listen to those episodes. But today, we're going to focus on carbon accounting. Now, within the Decarbonisation Net Zero Programme, we try and help you map out your Scope 1 and mainly your Scope 2 emissions within our free energy report. But today's episode will focus on carbon accounting and mainly on Scope 3 emissions moving forward. So if your business has been asked more and more to track your carbon emissions, perhaps for reporting or tendering purposes, which I am seeing, to be fair, more and more when I'm out and about in the field, or if you just want to understand more about carbon scopes and reporting and accounting, then today's session will be of interest to you. Now, to help with the discussion, we have a special guest and long-time contributor to our programme, David Wilshin from Auditel. Good morning, David, and thanks for joining.
Good morning, Jonathan, and thank you for having me on your podcast today. That's great.
Pleasure, and thanks for joining. Good stuff. Well, I will kick off then with our first question, and I always open with this question, bit of a job interview style structure. Can you give our audience some background to you and your role at Auditel, please?
Yes, of course. So I guess I've been involved now in sustainability and carbon reduction for about 15 years in total. Initially, it was kind of an additional job to the day job, if that makes sense. So, I worked in the automotive sector, and we were doing a lot of work about, when we removed a windscreen from a car, what we do with the waste, how do we dispose of it responsibly, what can we reuse, what can we recycle. So that got me my appetite for the sector. And then I made a funny segue move into InsurTech, where they were looking to have a online insurance solution that took out a lot of paper out of a lot of processes. So, that was another kind of project that I got really, really interested and involved in. And I left the day job and went into Auditel as a carbon and procurement specialist. Did a lot of training. We got a very good mentor in the business who used to work for KPMG as their head of sustainability. So he kind of trains up the team here. And since then, I haven't looked back, just been working in the sector doing carbon accounting activity. I'm very much the customer sort of relationship guy, the project manager, if you like. I don't do the maths. We have teams here which do all of that side of things. But I do the relationship stuff with the client and helping them deliver on their basically goals to reduce carbon in their operations.
Good stuff. And just then to our audience as well, give us a bit of background to Auditel. What does your company do? What's your sweet spot and so on, if that's okay?
Sure. Yeah, absolutely. So Auditel's just celebrated its 30th year, actually. Started in the 90s. I'm not going to give you the full history, don't worry. But in the kind of energy and telecom sector. And then about 2017, we introduced carbon into our portfolio of services. And we work with organisations across all sectors. Most of my clients are probably manufacturing, construction, and I've got some professional services in there. But across the network, of which there are over 80 consultants across the UK, we work across multiple sectors, delivering carbon reduction plans after having actually established their baseline carbon footprint. So we measure, and then we go into the business and help them reduce those emissions that they can in the different categories.
Interesting. That kind of mirrors us as well. We work in such a wide range of sectors and sizes and so on. So obviously there's a lot of parallels there between I dare say your job is more detailed than us, but yeah, a lot of parallels between the two programs, which is brilliant. So good. That's a really good introduction to yourself and your business. So thank you. So just getting into the wider discussion then, I like to just sort of set the scene on what we're going to talk about basically. Can you first of all explain to our audience, because people see buzzwords everywhere, what are Scope 1, Scope 2 and Scope 3 emissions in a brief summary, if that's possible?
Yeah, it is possible, I think. So the Scopes 1, 2 and 3 are defined by the Greenhouse Gas Protocol and are used as a specification to identify direct and indirect emissions coming out of your business. So when we talk about CO2 in your business, Scope 1, would be emissions that are produced by what you do day to day. So it'll be fuel that you burn in your vehicles. If you've got a gas boiler at your office, it'll be that as well. And if you're in a manufacturing sector, it might be other gases that you might use in your processes, such as propane. Basically, that's a direct emission. You're producing that emission in your operation, and that's scope 1. Scope 2 is predominantly for most businesses electricity. And the reason it's separated out from the others is that you don't burn electricity on site. You don't have a means to do that in your business. It's produced in the grid, but you're using the electricity. So the consumption is generated by your demand. And that's the difference. That's why it's a scope 2 emission. It's not burnt on your premises. And then scope 3 is kind of the rest of indirect. And I know we're going to get into more detail about scope 3, but there are 15 potential categories within scope 3 that need to be considered, which I'm sure we'll discuss as we move along.
Good stuff. Textbook answer. Fantastic. Thank you. So as you've alluded to, let's jump on to the next question. Summary of what are the most common types then of scope 3 emissions that a business would typically see?
Well, I think the most common and probably the easiest to get into, which I think is also a consideration, is things like business travel. So that's not your company car. That is taxis, aeroplanes, any vehicles you might have hired on a short-term basis, and also hotel stays and things like that. Now, generally, businesses, have those kind of records from their, financial year, and so business travel is one you can get into, I think, quite easily from that respect. Waste, common to all businesses. Your degree of waste will vary, no doubt. If you're office based, it's going to be predominantly how you separate waste in the office to recycling, etc. But again, you're likely to have invoices from a business that will be picking up your waste, whatever kind of sector you're in. So that's a good place to start. Get that category in there. And I think the third one, another easy one to get into, is employee commuting. So you can survey your employees, see how they get into work, how far they travel, what type of transport they use, etc. So with a bit of thinking about a questionnaire, you can get into that one as well.
Okay, so would it be a valid statement then to say, because the reporting that I've seen over the years has been that scope 3 tends to have the biggest amount of carbon emissions. So scope 1 and scope 2 are reasonably small. That's under the business control themselves. The reporting that I've seen, sort of scope 3 is a bigger percentage, basically. Is that a general rule of thumb, or does it really vary business by business or sector by sector, maybe?
No, generally, you're absolutely right, Jonathan. Scope 3 is the lion's share of most businesses' emissions. Absolutely. It does vary a lot by sector.
Of course, yeah.
I can give you an example if you like. Extreme example. If you're in the supermarket sector, then your scope 3 that we haven't talked about yet is all around your supply chain and your purchased goods and services. Yeah. And if you consider how many goods are going into a supermarket and the transportation involved with that, that's in your scope 3. So for a supermarket, very often their scope 3 will be more than 95% of their total emissions.
Understood. So just moving forward then, so as a business then, I want to start tracking these emissions, including scope 3. What benefits would that bring though? What are the benefits of actually tracking and accounting those scope 3 emissions?
Yeah, I think the benefits you get is an understanding of your business and its impact on the environment as an overall effect. So by using the scope 1, 2 and 3 criteria within the greenhouse gas protocol, it will systematically take you through the different emission categories. So you can look at them each in isolation. It's a bit like, the good old eating an elephant adage. You can do it in bite-sized chunks.
Yeah.
And by doing that, you can then identify the emission categories which look large. Where is your largest CO2 emission? Which categories do they fall within? And then you can have a little think about, well, let's have a little strategic think about how potentially we could look at addressing those and potentially reducing them. So it focuses the mind. It takes you out of your day-to-day business activities just to spend a bit of time thinking about the environmental impact of your business. That's kind of the process that we want to encourage businesses to adopt.
Okay, good stuff. Thank you. So I'd imagine then, moving on to the next question, if we look at, say, supply chain as an example here, how does a business determine what bits within their scope 3 in the supply chain they're responsible for. Is there not a bleed over or a crossover between the business in question that they're purchasing from in terms of their scope 1 and scope 2? And would that cross over to become your scope 3, or is it more cut and dry than that moving forward? Do you follow what I mean?
I do follow what you mean, and you're right. So, a business that is delivering goods to you, that is in your upstream transport category. But it's also within their fuel category, because they might own the vehicle that's delivering the goods. So there is crossover. The reason that, and so it can't be a clear, like a financial set of accounts. It's really can't be that at the moment. But the reason that scope 3 is so important, and you were encouraged by the standards to include that, is that you can influence that supplier. If you're a big client of theirs, let's say Tesco again, and Tesco is saying, okay, I've done all this lovely work in my scope 1 and 2, and now I want to address my supply chain, which is what they're doing, and they want to encourage that supply chain to become more sustainable. So they might, put into their contract awards encouragements and incentives to have a carbon reduction plan in place. So sorry, back to your point, there is bleed, there is grey, but that doesn't mean you can leave it alone.
Understood. No, good answer. That's you put that better than I was asking. So thanks for framing that better than I did. And also, I suppose, in putting it into context, the supply chain issue, it's like a ripple effect, isn't it? So it sort of ripples good behaviour throughout the supply chain and improves everyone's sort of sustainability standards moving forward. I suggest that's pretty much the long and short of it, isn't it? So
100%. I mean, most of the work we do is in the SME sector. And they may be 2 or 3 times removed from the overall purchaser. And for exactly that reason, that the pressure is coming sort of down the size of business. So from the big PLCs, and we're now in SME world, where even businesses turning over a few £1 million, could be asked for this kind of detail from their client base. So
I do see it a lot myself when I do go and do an energy audit on a business site. Mainly manufacturing and sort of the automotive supply chain at the moment. A lot of MDs and CEOs that I sit down with, they've been selling to certain people for donkey's years in their supply chain, but all of a sudden they've now got to start to measure their carbon in order to carry on winning tenders and winning business, basically. So we know it's coming. I do see it a lot, to be fair. So that's a good answer. Thank you. So just moving forward then to my next point. I'm a business. I need to start measuring this better. Twofold question. What practical steps would you suggest to start? But also, can this be done by the business themselves, or do they have to employ a consultant like yourselves? Do they have to log into some software or sign up to some software? Where's best to start, and is it possible to do it yourself moving forward?
Okay. So my advice in terms of where to start would be download the Greenhouse Gas Protocol document. There's a guidance document. I guess we can share the details.
Absolutely, we can share that at the end,
And it's easily found. The Scope 3 categories, all 15 of them, and it tells you what you need to look at in those categories. So you've got a framework then. It's free. You can get started. You can also use software. There's some good free software out there to get you started. So one of my favourites is software that's been developed with a link to a university. So I'm not sure with Coventry, but I know with some others such as Portsmouth and Brighton, they've worked with an organisation to develop a free carbon tool.
Excellent.
The good thing about that is you can scope 1 and 2 and the kind of measurable distance stuff where you've got invoices and things like that, you can put in there and it'll give you a carbon factor. What it doesn't do is get into the detail of what you do as a business and your supply chain. So if you're a manufacturer and you buy a lot of steel, it's not going to help you calculate the emission factors associated with the steel. If you can get that detail, you can put it into the calculator, but you've got to go and find it somewhere first. And so that's where the, I guess, transition from working with a free bit of software and then spending a bit of money happens, because you need a bit more specialist advice.
Okay. Yeah. Good. No. Good answer. Like I say, a lot of businesses that I see, the MD has numerous hats and they sometimes haven't got the capacity to also do this. So software is a good idea. We'll put those links in the description of the podcast at the end of the session if anyone wants to follow those links that David has suggested.
Sorry, the only thing I just add on the software before people go searching for software, I would not engage with software that says they can calculate your carbon footprint based on financial information. Okay. The reason I wouldn't do that is that it's a good place to start is get your purchase ledger and see where you spent money.
Yes.
But it doesn't relate to transport emissions of any goods and services you've purchased in a true way. And the reason I'm saying that is if you spent £1 million on Rolex watches as part of your business and they were delivered to you in a van, and then you spend £1 million on, I don't know, let's think about you're in production and you buy a set and it's all made of wood and that comes in a big lorry. That's going to cost a lot less than your Rolex watches. But if it asks for things like, kilowatt hours and actual mileages and the type of vehicle that you're going in and things like that, that's the kind of software that you want.
Good advice. Thank you. Good advice. Brilliant. Just moving on then to a bit of a wider scale here. In your experience, are there any particular industries or perhaps geographical regions where this kind of reporting is becoming more critical due to changing legislation or different kind of rules and regulations around it moving forward?
Yeah, there's a lot going on. I mean, existing regulation, certainly in the UK, larger business. So there's a streamlined energy and carbon reporting, which you have to put in your annual accounts, but you only have to do that if you turn over more than 36 million or have a balance sheet over 18,000, I think 250 employees. Two of those three anyway, you have to qualify. If you bid for government contracts, there are policy notes that are out there which you need to provide a carbon reduction plan as part of your submission. But again, they're large government contracts. You're talking £5 million plus. So it's bigger business. But in terms of sector, I think you asked about sector as well, what's coming down the line.
And I'm thinking maybe I'll throw an acronym at you that I've heard a lot. Does CBAM fit under this sort of framework a lot? Well, I'm seeing that more and more in manufacturing.
Yeah, it does. Absolutely. So CBAM is specific to any businesses that supply goods like cement or steel or aluminium, high intensity factors, and they supply those to EU-based businesses. And the reason CBAM exists, it's designed a carbon border adjustment mechanism, and it's designed to give European businesses who have a layer of sustainability within their processes to have a level playing field with businesses outside the EU. So you might have a manufacturer which you use somewhere in the world outside of EU, I won't say anywhere in particular, but they don't have the same level of sustainability baked into their business. So there would be a tax to import goods from that supplier compared to buying it from in the EU framework. And of course, we're no longer in the EU. So I've got one client, they make small pipes out of steel and they supply them to the aviation sector. So a lot of their customers are in Europe where they're put into the larger components. And, they've got to report quarterly on a CBAM return. They're not legally obliged to do it, but of course, commercial, because it's an EU directive. But of course, commercially, it wouldn't be great if they refused. So that's really coming down the line, but probably more relevant for two sectors, certainly. So construction sector is a huge place at the moment where not legislation, but adoption of standards is becoming relevant. So people like National Highways and Network Rail are working with a standard called PADS 2080, which is all around a systematic approach across the whole build project from initial design, through to the actual build and indeed the in-life and deconstruction of the building. That carbon consideration includes all of those elements in the supply chain. So all of the different businesses that are working, and it encourages them to work together. Network Rail, National Highways are adopting those standards. So it's commercial pressure, I think, in that sector is going to be very prevalent in the next couple of years.
Yeah, good answer. Thank you. So just to sort of start to wrap up now, we've got two more questions you'll be glad to hear. So just to sort of bring it back down to a sort of bit of a conclusion, shall we say? We've already mentioned this earlier on in the conversation, but just to confirm again, for any SMEs that are out there listening today, what are if you got three top tips for where they can start to measure their emissions, in particular their scope 3? Three top tips for our audience.
Three top tips. Get your framework. So get the greenhouse gas protocol. If you want to go a bit deeper, there's other standards, ISO standards and PAS 2060, but just start with that greenhouse gas protocol.
Yeah.
Yeah. And then do some work either with a tool, an online tool, or have a think about the different categories and what data you can get to support that. And if you are able to put a bit of work into it and you're able to put together a bit of surveys for your suppliers just to get some information from them as to what they supply and how. And then once you've kind of thought about your different categories and got some form of measurement, look at your highest emitters and just have a little strategic think about, is there anything I can do to reduce those? Do I have to use that supplier in Belgium when there's one 20 miles down the road? So start having those thought processes.
Great advice. Thank you. Last question you'll be pleased to hear. And I always end these discussions with a similar question, basically. So looking forward over the next 10, 15 years, how do you see this evolving? How do you see carbon reporting and accounting evolving in general, basically? Maybe there's some legislative changes, maybe there's some accounting changes. What's on the horizon to make this more tight and better moving forward, in your opinion?
So, you've already mentioned one thing, which is CBAM. Now, as I said, that's an EU initiative, but we have UK CBAM coming down the road.
Okay, interesting.
Yeah, so it's a couple of years away yet, but and I think that's going to be a really important player in the calculation of embodied carbon for anyone who's kind of working in those high energy sectors like cement and steel and aluminium, that type of thing. There's another piece of legislation that's being debated at the moment called Part Z. Mm-hmm. Part Z is a suggested amendment to the building regulations, so a major piece of legislation. And that's around this whole piece around looking at the entire carbon of a project from planning through to demolition of the building. So that's got the backing of all the major kind of tier 1 and tier 2 contractors. Lovely.
Great answer. And that's been a really interesting discussion this morning. I've really enjoyed it, and I'm sure our audience will as well. So David, thank you for joining today, and thanks to everyone for listening. And also a thanks to Maria for producing today's session as well. So I just want to quickly run through the support that's available through our programme, the Decarbonisation Net Zero Programme. As many of you will know, we provide free energy audits to our communities in the West Midlands Combined Authority and Warwickshire areas. We'll do you a free report that shows you where you're being inefficient, and we also then have grants available to put towards those carbon reduction projects. For example, double glazing, LED lighting, new boilers, and so on and so forth. So if that sounds of interest, we're still doing the programme. We still have some money left. We also have, if today's session's been of interest to you, myself and David did a webinar some time ago on the 28th of February 2024, where we went through carbon accounting in a lot more detail. So if that's of interest, again, the link will be in our podcast description. And then finally, if you've liked what David's had to say, you want to engage with Auditel more moving forward, the link to his business Auditel will be in the podcast description as well. I'm Jonathan Howl. Thanks for listening.